Hello and welcome. Robert Schein here, Managing Director and Partner of Blanke Schein Wealth Management. Today is Wednesday, June 3rd, 2020. I got three topics today. I want to keep my friends, family, and clients up to date as it relates to markets, what traders are watching, insights that we have, and overall portfolio investment management and the topics that are concerning today's market. So let's get right into it. Our first topic, the Fed's tailwind. I've reported about this several times. Monetary policy has been in concert with fiscal stimulus as well. Basically from governments, not only in the United States, but around the world, we're seeing sort of a unification of monetary policy to provide markets, both domestically and internationally, to deal with the pandemic. And so the floodgates have been open as it relates to cheap money. And that's a tailwind as we're seeing in the markets. You know, we're seeing 3-month highs on sort of the three major indices over the last 3 months, which no one would have predicted. But one of the underpinnings of that was the complement of both fiscal and monetary policy. So right now, markets are now up again in anticipation of an additional stimulus round that's going to come. We should see this from the Senate maybe this week, later next week, or early next week, if you will. But I think the market's sort of pulling forward sort of those returns right now. So we could see markets getting a little ahead of themselves, but right now we're having a pretty good day. The Dow's over 26,000. But the reason is the underpinning of all of this money, the cheap money that's in the system as of the stimulus that's out there. To go a little bit further and explain the strength underneath what the market deems to be important is when the market looks at the U.S. economy and the fundamentals of the economy. You know, the engine of the U.S. economy is our workforce, if you will, and the small businesses are those that employ everybody. So if we look at initial claims, which late March have been reported since late March, have peaked. So the initial jobless claims on unemployment insurance, we've seen the peak since late March, which is extremely positive to sort of that you're on the backside of the initial claim side. Now, the cumulative number of the initial claims is still going to be a large number. It's going to grow and grow and grow. But the continuing claims versus the initial claims, so meaning from when you start on unemployment and the time that you're on until you actually basically go back to work and you're returning to work. And we want to see this theory play out that, you know, when Congress put together the assistance to the small business program, the PPP, Paycheck Protection Program, for small business owners to receive this stimulus money, this money which is a grant. And if you have this money in hand as a small business owner, and we know that over $500 billion is out there in the marketplace right now, you are required to now rehire your workforce in order for this loan that you've received to be forgiven. Okay, and so there's defining details behind that and rules that are very specific for that. So the small business owner wants that loan to be a grant, if you will, and converted to a grant. You have to rehire your workforce. Well, that's where the continuing claims number, the market is watching that, and it could be next couple of weeks. If not, we saw that come down last week, but we want to see the next couple of weeks that trend to continue to persist, which means from the initial to continuing claims, both numbers have peaked. So markets are watching these very, very closely, as we will too. But it's interesting. That's the economic information that truly is fundamentally the sort of the heartbeat of America right now that really matters. And that's why markets are up. My final topic of the day, S&P 500. You know, we're seeing this S&P almost on a daily basis go higher, grind its way higher and higher. It's a very positive setup that we're seeing internally. We're seeing, the rotation within from sector to sector. So meaning it's a broad, all the sectors, all 11 sectors of the S&P 500 have been participating, and specifically the financials and energies are playing catch up as technology has led. You know, since March 23rd, the low in the market, the NASDAQ is up just over 40% from the lows just a few months ago. So that's very positive, but we also wanted to see S&P catch up because there's a lot of financials, there's a lot of energy, a lot of other sectors that need to catch up if we're going to see sort of a consolidation here and we grind our way to higher highs in weeks and months and by year end, if you will. But internally, a lot of positive setup in the S&P 500. The market is broadening its rally, which is good. We just want to keep an eye on the volume. Volume seems to be weak or lighter than we'd like to see in rallies like these for persistence. on a go-forward basis. So that could indicate that we could see some the rally itself tire out, which would not be unexpected or uncommon, and volatility could creep back into this marketplace. But again, the key later this week is going to be the unemployment numbers and continuing claims. So that's a lot to watch, a lot to monitor. I appreciate your time today, and thanks for tuning in. Until next time.